What's up everybody? So from the past few days, Cameron's trading strategy is in trending. Cameron is ICT's son, if you don't know. So a few days back, ICT revealed his trading strategy in a Twitter space, which he called the 30-second model. And then yesterday, ICT tweeted this. You can see in this screenshot. He called it a drawn liquidity and a 30-second silver bullet. So you can see that the timing was around 12:40 or 12:50 p.m. Now you say that in his silver bullet strategy the timing was different, but it shouldn't surprise you because ICT keeps changing the timings. Okay, so it shouldn't surprise you. Okay, and the important thing is, why is this an important draw on liquidity? Why not this one? So you have to understand this. Okay, the timing isn't much important because later on in his lecture he said that you can use any time frame like 1 minute or 3 minutes. The timing isn't important. So in this lecture I will explain the strategy of how you can use it on 1 minute time frame and how you can identify a high probability drawn liquidity. So we will discuss the example that ICT shared in his Twitter. Okay, you can see that here the Nasdaq made a high, okay, and it took this previous high. Okay, you can see that it took the previous high and then the market came down. It created these fair value gaps. Okay, and again what happened here? Again the market came down and it created a fair value gap. So ICT entered around this area on the 30-second, but I will explain how you can enter on the 1 minute time frame. So you can see that here also we got a market structure break. Okay, like this candle closed below it. Okay, and then this gap got filled. So the SMT pair of the Nasdaq 100 mini is SPX 500. In SPX you can see that the same high was made, and if you compare these highs here, this high wasn't swept. Okay, you can see in Nasdaq this high got swept and here it didn't. So we got an SMT divergence. Okay, I have already explained it in my silver bullet strategy that for every move there will be an SMT divergence. As ICT said, in 90% of his trades he uses SMT divergence. So you got this SMT divergence. The next important thing is order block or fair value gap. So you can see that we got this close below consecutive down closing candles and this fair value gap, and once this gap got filled, the market came down and it took this sell side liquidity. Okay, so this will be your entry, this fair value gap. Your stop loss will be above here and you will target this sell side liquidity, which is around 41 or 42 handles as ICT shared in his tweet. So this is all about the Cameron's strategy. Okay, you have to identify an important drawn liquidity. An important drawn liquidity is the one with SMT divergence. When there is an SMT divergence and a fair value gap, this is where you will enter into your shorts or longs and you will target the liquidity of the sell side.